On behalf of Crosscheck Media and Biz Talk Today TV, welcome everyone to Wayve Wire. I am your host, Todd Schoenberger, and joining me as they do every week are the C-suite executives from Wayve Capital. We have Joe Besecker, the CEO, and the CIO, Rhys Williams. Rhys, I'm going to start with you. We're having a monster sell-off on Wall Street right now. Everybody's watching this show. The entire planet wants to know, Rhys, there's no pressure here. Why are markets selling off?
Wow, that's a great question. And I think we can only guess because to me, it does not seem like the news flow was so bad here. I thought NVIDIA had a really good quarter, really good guide, talked about how everybody's actually using all this AI and not just spending lots of money on it. Token use is through the roof. AI agents everywhere, and obviously it's going to grow exponentially over the next couple of years. So I thought NVIDIA did its part. OpenAI managed to get money at a crazy valuation. We can all argue whether that's a good valuation or not. It seems high to me, but they got money. That's the most important thing. So they're going to be using that to spend that money over the next couple of years. And it's just very interesting that OpenAI gets 730 billion valuation and Oracle's on the new low list, which is most identified with OpenAI. So there's a lot of cross currents out there that I can say don't make a ton of sense. I thought the PPI number was a bit hot. Obviously, that makes people unhappy. But on the positive side, long bonds are rallying, and we're sitting there right pretty close to 4%. Mortgage rates under 6. That's good. So I think, long story short, I think there's more positives than negatives. Currently, the market's only focused on the negatives.
Right. I agree with that. And it does seem that way because we have now financials are leading the way down for the markets. And not only that, it's been such a volatile month. The S&P, we're going to close at a loss for the month. Completely unheard of when we started here. Joe, what do you think, though? Is this 1 month? Is this something we're just going to be able to forget? Or do you think we're going to see overflow as we turn the calendar on Monday?
No, Todd, what we need to do is end the show. Nobody's going to want to look at the market. The world's coming to an end, and it's just the way it is. You talked about financials. I think that is as silly as it gets. As a matter of fact, at my own firm, we ran a banking and finance fund, and I still talk to the guys that run it, and I also talk to a lot of the companies that are in those indexes, and their business is just fine. Actually getting better. I think that sometimes you get markets that are irrational. I keep telling you, though, and as I said, I don't want to sound like Johnny One Tune. We're in a transition period, all right? And the world's trying to figure out, with all this money going into certain areas, obviously AI and others, is that going to leave a deficit in other areas? I do not think so. I'm about ready to join my buddy Rhys at the Raymond James conference down here in Orlando. We're going to be it starts at 7:30 in the morning, it goes to 6. We'll be seeing company after company, and I am going to see a lot of financials because I can guarantee you that these financials and the CEOs are going to say, this is silly. I believe it's silly. I believe that people out there, if they want to take a broader view, they can buy one of the bank financial services ETFs. And I feel very confident that they'll do well over the next small period of time, a year or so. And I think we've gotten away from the world of investing. And, I speak a lot. I do TV. I do all these different things. And I use this quote a lot from Mark Twain that he said he was rarely able to spot an opportunity until it ceased to be one. Well, if you're not looking now, you're going to miss the opportunity. I say, and I said this a couple weeks ago, we're in this kind of rough weather patch. We'll get through it. Storms pass. These companies are on sale. We should take advantage.
I hope you're right. And Rhys, with that, you brought up NVIDIA. You have a company that reported a 73% revenue growth, record sales on the data centers. The company is just thriving left and right, and yet the stock got hammered yesterday. It was down.
It was 5%. Up first. It went up first.
Yeah, it went up first because all the suckers went in and started buying it, and then all the real money players all sold off. And
there was a lot of volume in the aftermarket. I mean,
we'll see
a lot of volume.
We'll see who the suckers are 6 months, a year from now.
Okay, I like that optimism. I really do. But it does go back to the entire thing where we have this sell-off and the common denominator seems to be AI. Rhys, last week we talked about Blue Owl and the private credit issues. Do you think that there's some carryover there as far as maybe we're not putting a really good valuation or at least a number or percentage on AI demand, and therefore it's carrying over into some of these corporate loans that are taking place?
Yeah, I think it gets to the broader question on private equity valuations, which is, in some ways, that's way more of an art than a science. Maybe aggressive a little bit, gilding the lily somewhat. I mean, think about it. All you need to know about private market valuations versus public market valuations is OpenAI just sold stock at a new high, and Oracle's in half because of its exposure to OpenAI. So someone's wrong. It's either the public or the private side. And so I do think the market is starting to question, okay, what are these marks just generally beyond the whole AI disruption trade, which of course has been very significant. And kind of why I think you kind of leg in slowly, because it does seem like the markets go down hard and these stocks go down hard on any bad news. They don't rally as much on good news. So I still think you're in that environment where your risk reward is short-term negative. I agree with Joe, long-term quite positive.
So, Joe, next week you're going to be at Raymond James. It's a big conference in Orlando. They put together many great events, but everybody's going to be talking about AI and obviously the market performance from February. What do you think, though? Do you think that we've been way too aggressive in our valuation and are really trying to forecast AI demand? Or do you think that there's probably some other something on the undertow that's making us take pause in this market?
Well, the answer to your question is that the valuations clearly, because the market is stating it at the moment, were a little aggressive. The real question in my mind is, what is the effect of the use and the uptake in use of AI? So you saw a couple companies, eBay being one, Block being the other, slash a lot of laborers, a lot of people. And will that continue to happen? Or will the use of AI actually, after it gets through its transition period, actually employ a different type of person? I believe that it is not a binary thing. It's not an either or. I think it'll be a combination of those things. And I'm looking for companies when I'm there that are going to utilize the wonderful tools that AI provides and increase their productivity. I think you're going to see productivity of these companies improve. I think you're going to see cost savings. I think it's silly. I think the banks, we're talking about financials, the banks are going to be able to save all kinds of money with the increased productivity that comes with that. So, you just got to go out there. You got to look at each different situation individually. And ultimately, I think we're going to be able to put more than a very good portfolio together. I think people are a little too emotional at this moment, and I think people should step back and look. We have a great country. We have great innovators. We got great management. We great entrepreneurs, and there will be a bull market somewhere. And in that space that I keep telling you about, life sciences, it hasn't really hit yet, but I think the technology that they'll be able to deploy are going to make our lives much better, much healthier, and that's why one of the areas I like.
Well, you brought up life sciences before, actually quite a bit on this show, and yes, that does seem to be an area that is it was probably some optimism.
It should benefit. It should. Right now, they're just starting to. We AI. Well, if we'd done this 3 years ago, it would be like one of the last topics. Now it's at the top. So this has moved in pretty quickly. Not everybody's been able to deploy reasonably and with trust all of the AI tools, but it will happen. And right now, if you're in a business like life sciences or defense, you got to make sure this stuff works. So we're not quite there yet. But the interesting part is what it can do, and that's what we're trying to figure out.
Rhys, the U.S. met with the Iranian officials yesterday in Geneva, and evidently the talks trying to find some negotiation, some type of a friendly, I guess, I don't know. They're trying to come up with an agreement. Not exactly sure what the agreement is going to entail, but they're going to meet again next week. The question I have for you, though, is that oil stocks, even with the sell-off today, continue to rise. What are you telling Wayve Capital clients? Is this an area that you would maybe go overweight at this point?
Well, the market weight for oil is really low. And, one of the things we're going to do at the Raymond James conference is meet with a bunch of energy companies. But I think it's like 2% in the S&P. It was probably 10%
when it was really hot. Yeah.
Yeah. Maybe even 15 at one point back in the late 70s when oil was really hot. But my point is, I don't know if you go overweight, but I would be at least market weight just because it is an area that could have a lot of optionality if something goes wrong and the Strait of Hormuz gets closed, and which is certainly a possibility. I have no idea whether Trump will take a deal or not. I think there's a deal to have if they want to take it. The question is, do they want to take it? He's getting a lot of pressure from other Republicans to do the regime change things to get rid of the Iranians. Everybody our age remembers 1979 and the hostage crisis, and so but there's a whole bunch of people that are younger than us that have no recollection of that whatsoever. So that's why I think the American people are against this war. I mean, I think
Well, I don't think I don't think
21% want to do it.
Trump's history is not, he's not a war guy.
Yeah.
All right. So I think you said it well. I believe that he's going to try to do everything in his power to try to avoid that. But they're not easy people to deal with. And there's I would say that one of the things that if you're going to do it, you have to do it soon, because we've taken out all their air defense. So, it will be a much safer proposition now. I don't want to see it. I hope they come. Peace is always better than war. And, but in general, you want to be even weight, I think, with energy, because the need for energy in our country today, and actually global, is massive. So whether or not it gets a bump from a supply constraint or not, I believe that energy is an area that you need to at least have, I believe, like you said, Rhys, an equal weight.
Especially now with this AI build out.
That's what I'm saying. Yeah.
That's going to be, regardless of what happens, I agree with you. Yeah, that's going to need energy.
Well, you got Exxon, Conoco, Chevron all up today, even though the market Dow is down over 1% right now. Exxon Mobil is just a cat's whisker away from a 52-week high. So really seeing some great growth in those companies. Also like to point out one thing, the single largest shareholder of Exxon Mobil stock is the teachers union pension in this country. So before everybody starts talking about windfall profits taxes and all that other BS, just keep that in mind. So there's my political rant for the day.
I don't think it's going to be a windfall profits tax for the next 3 years. I can guarantee you that in oil.
You're probably right about that. So let's turn the page to the PPI number today. Came out hotter than expected, especially since January 2025 was so hot. I think everyone was expecting a much cooler number. I mean, it seems like the PPI report really lit the fuse for this sell-off today. What do you think, Rhys? I mean, what's the story?
Well, like I said, but Joe and I disagree with this maybe, but I do think the building blocks of steel and copper, these tariffs on some of these items, which are not actually even part of the IEPA, which got overturned by the Supreme Court. I do think that sort of filters into PPI because it does make more expensive things. And don't forget, there's 100 jobs that use steel for every one job that makes steel. So my guess is that's what's happening with PPI.
The biggest jump was in services. It was not in the basic materials. The biggest jump was in services. Now, we could try to explain that. I think that looking at 1 month's, 1 quarter's kind of numbers, in general, I think my belief hasn't changed, and we are a little bit on either side of this coin. I think that we're in this transition period. You're going to have weird bumps here and there, but I can tell you, I'm sure as heck think that a year from now, interest rates will be lower, and I believe the productivity will be higher, and I believe that my biggest concern, what I want to find out, is what we were just talking about earlier. What is going to happen with energy prices? Because if all this stuff really comes true, and all this investment gets better, we're going to need tremendous amounts of power. And so that could be inflationary.
Yeah, that is true. And you're talking about the AI data centers. And actually, the president brought this up at the State of the Union, talking about the amount of utility resources that we need to power these data centers. Rhys, what about that? I mean, there does seem to be, first of all, you have these data centers. They're being funded by private credit funds mostly. And then, therefore, they're going to have to find utilities from the municipalities, or, how are you going to do that? So there's got to be critical mass, though, don't you think? I mean, where's the category killer here where maybe you could use renewables in this space?
I do think renewables actually could get a leg going. And I think a lot of these companies that have something to do that's off the grid is really important for the whole data center build out, because I believe Trump's going to have a big meeting on March 3rd where all the big hyperscalers are going to pledge to make sure that ratepayers don't have to pay more if they have a data center in their neighborhood. And so I think people are going to need these off-the-grid solutions, because there is no on-the-grid solution which does not involve ratepayers paying more. So there's some very interesting fuel cell technologies out there that are now ready for prime time, and I think poised to do very well.
Like your Bloom Energy, right?
That's one example, yes.
Okay, so let's talk about metals. Now, what I don't understand, Joe, you have this big sell-off, you have all this uncertainty, potential war in the Middle East, yet metals aren't really moving. Why not?
Well, it's nice that you come to me, because I'm the non-metals guy. I just want to see somebody go to the Wawa with a brick of gold and then start shaving stuff off. It's not me. I think most of the metal action is being done overseas. I think it has a lot to do with our currency and then some of the games that some of these people are playing with it. In my view, and I hear lots of really smart people say that gold's going to continue to go higher, the metals will go higher. I think there's a play here when it comes to, the industrial and it's there. But right now, I would much rather own, like I said before, Warren Buffett says, I want to invest in people that are going to make me money instead of a commodity that's just going to sit there and look at me. So I am watching with interest, but that's not an area that I'm going to play. The other commodities, I actually do think some of the industrial commodities like platinum and nickel and copper, those are things that I would take a close look at. The gold and silver, and interestingly enough, I mean, we haven't talked about it. It's interesting, the crypto and the Bitcoin, which was supposed to be a store of value, hasn't really shown its face that way. So it'll be interesting to see how all that plays out.
Rhys, now, am I able to go to that Wawa with my brick of gold and buy, what are those?
There you go. Let me shave a couple
sizzlings or something.
You can probably get some cryptocurrency, and I don't know. But
here's my hoagie. Here's a couple shavings from my hoagie.
Yeah,
I just don't see it. I've never understood it. I mean, if we get to that point, Todd, we might as well kiss it goodbye anyway.
Rhys, are you doing anything on the metal side for Wayve Capital?
Well, we have a position in copper stocks, one particular copper stock, but they're all going to work or none of them are going to work. So I don't think there's necessary that I disclose which one. But I do like that one because it's got the industrial play, and it's just to get a new copper mine in. And I think obviously silver's had a huge correction. But I would at least have some weighting in gold and silver, because it is a nice, even if it's not going to be as great an area as it has been for the last couple of years, it is a nice hedge if the world falls apart, and that is a non-zero chance outcome. So I do think having some exposure in your portfolio makes some sense.
I'm not against that.
I wouldn't want to have a 30% weighting in gold and silver.
Okay, that's good to know. Well, I tell you what, if you guys were investing, if there was a stock to invest in the Team USA men's and women's hockey teams, that you guys are doing great this week.
Well, that would be gold. That would be gold, baby.
Absolutely. So, guys, we're going to cut it there, because next Friday is a very special Wayve Wire. We have the jobs report to go over. This is going to be the all-world all important, edge of your seat jobs report that's coming out. It's going to really set the tone for the Fed meeting in March and beyond. So we definitely want to talk about that and break it all down.
Speaking of jobs, I got to say it. My daughter just got accepted to the University of Pennsylvania Veterinarian School today, this morning.
Congratulations.
And as I told a lot of my friends, thank God I found out before I put my contacts in. I'm thrilled. She's worked so hard. And, you know, you're going to see jobs. I am very confident that once we get through this figuring out who does what job where, who gets productivity, I don't believe jobs are going. And we are having a huge manufacturing opportunity here in the United States. So I think the jobs will switch. And I don't know about short term, but long term, I think we're going to be in very good shape.
Well, I think it's also, that's a very good point. And think about, 15 years ago or 20 years ago, nobody had heard of a social influencer. Now, 10% of my apartment building in Miami makes a living as social influencers. Not me, unfortunately, but
no, you're influencing me right now, Rhys.
but my point is, AI will create a lot of jobs. We don't even know what they are yet.
Exactly.
And that's going to be. And think about the gig economy. Gig economy didn't exist 20 years ago.
Exactly.
People
who would have thought there were Uber drivers,
Lyft, or deliver?
Yeah, exactly.
Yeah. There's a million jobs that will be created that nobody knows about,
and smart entrepreneurs will create them.
Yes, absolutely. Well, that is great, and we'll definitely and look at the streaming side too, and the streaming media side, something that is relatively new and continues to grow every month. And I know Crosscheck Media is at the forefront of all of that. And we appreciate the audience for joining us as we take part in this journey.
Netflix should buy Crosscheck.
Yeah, there you go. Yeah. Joe, congratulations to your daughter. That's fantastic news.
Congratulations, Lily. Yep.
Plus, you'll have a free vet to cover all those horses.
And I need him because we got 18 bazillion animals in our house.
I know.
Plus my horses.
Well, and it's good for the economy. That's at least $100,000 a year.
At least, that's right.
Thanks, Rhys. Thanks for reminding me.
All right, guys. Well, that's great. Well, we'll be back next Friday, 12 noon live next Friday, breaking down that all-important jobs report. You definitely will want to hear what the guys have to say then. So on behalf of Joe Besecker and Rhys Williams, I am Todd Schoenberger. Thank you once again for joining us on Wayve Wire. We'll catch you next time. Take care.
All right. Thanks. Bye.
Access real-time data and intelligent analytics exactly when you need them. Get the right data at the right time. Learn more at quotemedia.com.
We're the economic modern family. Watch the flow. Market vibes tell you where the trends might go. We're the economic fam, guiding the scene from the streets to the screens to your trading machine. Tap in, stay tuned, feel the beat line, cause the market tells a story through the family line.
There's more happening behind the headlines, and you deserve the full story. At Biz Talk Today TV, we break down investing, government moves, entertainment business, and even sports gambling, all in one place. Real conversations, smart insights, content that helps you think smarter and stay ahead. Thousands are tuning in. Don't miss what's next. Subscribe now to Biz Talk Today TV on YouTube and join the conversation shaping the future.